Hi all, this is the tutorial video from Sam at Teach the World to Trade for our fourth workshop, which was the third in the series of the trade process that I've been teaching you all. So we covered trade management. So identify a trade, execute a trade, then we've got to manage a trade, which is a super important part of the process, all super important, but traders succeed in their execution and their management of their trades. And pretty much anyone can identify a trade. You can give them simple ways of looking at a market or reading the news, and they can come up with an idea, right? But it's all about the execution of any idea. It's not just in trading, it's in everything we do. So I'm going to run through a trade process, identify a trade, look to how I'd execute it, and then how I'd manage that trade going forward. So let's have a little dive in now. As usual, I'm using TradingView. I'm going to get up one of my charts. I'm going to look at Brent today because Brent is something that I'd be trading this week and last week, and it's been going quite well. And it's been a very busy market, so I may as well use a market that I'm going to use in my working week. So let's bring up, this is the Brent crude outright with I think we're on a September expiry of this future. And let's have a little look what we've been doing. We came off a bit last week from around the 84 region, 84, 85. You can do a simple bit of technical analysis from this peak up here. And this one here. No. As always with these support and resistance lines and channels, we just extend these lines, but to have a little forward projection of if these levels continued, would they act again as a support or resistance? But this is showing a bearish channel. What we've got here, we've got a strong bounce. And this is interesting because if we just drew this from this low point here for this red candle, this recent low, and this green candle and extended it that day, it worked here a second time. So that's a good bullish channel line. It's worked here. So while we're above this bullish channel, we're going up, I think. So this is the simple theory when we're doing technical analysis, we're drawing these lines. Normally when we're above them, we're bullish, and below them, we're bearish, right? So this channel line is one I'm going to be looking at this week, funnily enough, to see if it stays above. Because if it breaks through here, I'll be putting on a short trade and looking to go short Brent this week. If we hold, I'm going to be looking to go long. So we've got a channel. It's very interesting. We've found it's worked here. What else have we got on this? This is the daily chart. As we see up here, the day is selected, the D. And again, this low is pivotal. That's around, it's quite low, 76. It's the low of the month. Yeah, the low of the month. We haven't been that low since start of the year, February. So we had a huge bounce from around 76, 80, 76, 74 to 76, 80, around that level. And then we had a big bounce up all the way up to 87. So that's a $10 bounce, big move for oil, $10 bounce. And then we hit around 88, and then we sold off to where we are today. It's around 80, big round number. So that's why I like oil around here as well, because we're at this big pivotal, super, this is human number bias, big round number 80. Are we going to bounce from there, or are we going to break below and head towards new lows? Okay, so what else is becoming clear? Just looking at the candles, we're having these big sell-offs, and then when we see this with the wick, and then we're bouncing from there. So we're having long wicks and then bouncing into them, and then we're not closing above here, but we're slightly below. For me, I've got enough right now for this daily. I've got my big level on a daily that I'm going to be watching each day that it stays above. And I'm going to have a little look on an hourly to see if it gives me anything else. See, this is a gap open. The market opened higher overnight, so it closes on Friday and then it opens on Sunday night. So something happened over the weekend to make it open a little bit higher. So the market settled here at 79.86, so almost 80. And we gapped open a little bit higher, 50 cents or so. And then as we've opened up in the European Open, it's the time here, it's around 7 a.m. We've sold off to where we are now, 80.10. But there's some more significant levels here. This is last week. Look, we gapped lower. So this is the Sunday night candle here. Market closed, opens on the, Friday night close, and then Sunday night open. So it closed here. Market, there's lots of information that comes out over the weekend still. And then the market's opened with that information slightly lower. And we've traded lower again. Hit the line that we were speaking about on the daily. And then we've had a rally. And what's happened, which happens a lot, these gaps that are created very often, like 9.5 times out of 10, get closed. So there's no data here going forward until we go over here, and then it trades through the level, and this gap is then what's called closed by a series of candles in the future. So it's an important thing to remember, because we've got a gap here, right? So I think this gap's going to be closed today, and we're going to head towards this level. So for me, based on that theory, I would be looking to sell. I mean, would I be happy now? Let's have a little look. I think for the sake of this trading demonstration, I'll sell now. And then I'd be looking a target down here, closing the gap and then hitting this target. So I'll be taking a short. So I selected our short position. And then I'll be looking at a stop above, probably here. That's not going to give me a good risk reward, so I think I'll have to be a bit tighter. I think above here, as you see, we've broken this level that we bounced off quite heavily in the short term. I think as long as we're below there, we're mildly bearish. So I'd be having a stop slightly above that level. Because this is quite an aggressive trade, aggressive momentum trade. So we've broken below where it's bounced off twice today, quite significantly in the short term. So we sold it, and we're looking for, this is our target. But before that, I think we've got our first challenge is to close this gap, right? We've got this gap between where it's settled here on Friday night when the market closed, and then it opened up here. So like using that gap theory, this is our first challenge, is to reach this area here. So that's our first challenge. That's what we're aiming for. And then down here would be breaking this level here. This would be our second challenge. Okay, so we've got a trade on. We've got our stop based on this pivot level that we've determined on the hourly chart. So then, when managing this trade, so we're looking for our trade to go onside. It's what we do when the market's on, our trade is onside, and what to do when our trade is offside. It's what we do when we're managing our trade. So, as it is, if our trade goes wrong, we've just put it on. We've got a predetermined stop. We've got a decent risk reward ratio of 3-1, as long as we're stopping here and looking to run it down here. So if it goes wrong, we know where we're getting out. Done. So downside's managed. So then if we're going onside and we get into some profit, we know that our first challenge is to close this gap. Okay. So if we're going onside, if that was just our initial risk reward and that was our exit, we'd only have a risk reward of 1.26, which isn't the best. But if you're momentum trading and it does get there and you want to get out because you don't think it's going to break, that's your risk reward, and that'll still be a winning trade. But that's your first challenge. So once it gets there, you've got to you can assess whether or not you get out there based on, does it break? Do you feel confident? Or if you have a decent portion of risk on, say you've got 2 or 3 lots or £3 or £4 per point risk on this Brent, then you could take some off at this level if you wanted to, because that's your first challenge. You go, do you know what? I'm going to de-risk myself there because that's the first challenge where it could reverse. So I'll de-risk myself and take off some risk, some of my trade, and then look to run the rest to challenge 2. And then I might take some more risk off there, and then I may run it further if it breaks through that second challenge. And then we're home dry, and we're going to have a big breakthrough this support line, the support channel, if it does break, and then you're off to the races, I think. So this is how I'd be managing this one. Alternative, so that's kind of like a safe way to manage your trade. You want to be taking risk off as you're in profit, and then running portions of your risk as you go to each challenge, and then letting some run hopefully for further gains. Because each time you're taking it off, it could be going back up to your entry level or your stop. But again, this is where the management comes in. If you do get out of some here, this first challenge, and it goes up to your sell level, it's up to you to decide whether you sell some more or you get out the rest of your trade because you believe it's going against you. Okay. Alternatively, it breaks your first challenge. You've accepted that you are right, and then you could put more on until you go to challenge 2. But for me, this is the managing. What I would do with this short, I'd be looking at challenge 1. I'd probably take some off, a portion of my risk off here. But then if I got to challenge 2 and it broke, for me, this is the weekly big level that we're looking at to smash through this channel. And if we did break through here, I would probably add to my shorts, because that would be a big confirmation of a bearish move. And I'd probably put more on here to then manage a good short position for the rest of the week. That's how I'd look at it. I still keep my stop the same. If I got stopped out and I was out of the trade, I would then be looking at entering maybe up here again, where we've had a big sell-off, looking at that bearish channel, potentially. But I'd reassess. I'd run through my entire process again. This is one trade. Take them one at a time. The moment we've sold, I take some off at challenge 1, I think. And then I'd look for challenge 2 and a break of challenge 2. And then I would be potentially adding to that trade. Okay, so that is a little bit of trade management. We'll discuss it again in tomorrow's workshop. I hope this tutorial helps. All right, have a good day.